Brexit and the City of London. Will the UK's financial sector flounder without the European Union, or is it an opportunity to flourish? This is Roundtable with me, David Foster. No one is remotely sure. There are 1,000, probably more, opinions about what Brexit's going to mean for the City of London, its revenues, jobs and its reputation as a leading global financial centre. Here's Roundtable correspondent Assed Baig in the city with some of the possible pros and cons.
The City of London. It's the financial capital of the world. Big money and big style.
But in the wake of Brexit and the potential changes that could take place, is the city as we know it about to get a makeover?
There's no disputing London's dominance in the financial services industry. It's ranked #1 in the world, ahead of New York, Singapore and Hong Kong. About 80% of foreign exchange trading and 30% of all bank lending in the EU flows through the UK.
I want Britain to be a great global trading nation that is respected around the world and strong, confident and united at home.
But does the city stand to flourish or fail after Brexit? Well, that's dependent on the deal the UK government manages to get. Hard Brexit would mean losing access to the single market and customs union. Soft Brexit means leaving the EU but retaining that access.
Running up to the referendum, banks had been among the most vocal opponents of Brexit. They donated millions towards the Remain campaign and warned that thousands of jobs could leave the UK. But since their warnings were dismissed, what's actually happening now?
13 major banks have indicated they'll move operations to EU countries. That could mean the relocation of more than 9,000 jobs in the next 2 years. Barclays has opted for Ireland and committed to its new European headquarters in 20 years. JP Morgan is likely to use Frankfurt as its European base and says a quarter of its UK workforce may be relocated. Deutsche Bank says it'll stay put in the capital for at least 25 years. But they still foresee up to 4,000 staff moving from the UK to Europe. But those who supported Britain's divorce from the EU remain unfazed by the mood in the city. Brexit could allow the UK to strike individual deals with countries rather than through the EU, making it a global trading nation. And as financial services go global, passporting, which allows companies to trade across the EU freely, could become less of a sticking point in the Brexit debate. Brexiteers say getting rid of EU red tape would free the UK up to decide its own rules.
Although there's clearly some downside for the City of London and for the economy as a whole from this particular channel, I think on balance that's more than offset by the potential upsides elsewhere.
No one yet knows exactly what the final Brexit deal will look like, or what impact it would have over the city. Britain's divorce from the EU could bring newfound strength and independence to the city. But there's a lot at stake, not least London's legacy as one of the world's leading financial centres.
Joining me at the Roundtable today, Kelvin Hopkins, British Labour MP for Luton North, pro-Brexit. Next to him, Graham Bleach, founder of Macronomics Consulting, who says the city will thrive after Brexit. To my left, the economist Vicky Price, who believes the opposite, as does Ian Dunt, editor of politics.co.uk and the author of Brexit, What the Hell Happens Now? Well, that's one of the things we're going to be discussing, what the hell happens now. But let's start from this point of view. If you would, Ian, explain to Kelvin's constituents, Luton North, it's a multi-ethnic, largely working class area of a city in South Midlands, right? Why on earth should anybody there care about these big bonus boys and all the others actually leaving?
Because the financial services sector brings in an awful lot of revenue to the Treasury. And when we have less revenue to the Treasury, we have less money to spend on public services and on social services and various other things that we desperately want to keep. It may well be that as a country, we want to start re-nosing our economy away from financial services. And there could be good arguments for that. However, that should be done, if it was to be done, in a purposeful way, where we are specifically trying to achieve that aim and are making up for it in other parts of the economy. If it's done as some kind of unforeseen repercussion of a separate political action in this highly chaotic way as we're seeing right now, with no certainty being provided to firms, forcing them to leave simply because they can't wait for the government to come up with some firm commitments on Brexit one way or another, that is rather more damaging, and that would be damaging to everyone.
OK, but if you come from London, not from Luton, all of these people leave, house prices are going to go down, and so are rents. That's great news, isn't it?
Well, it doesn't quite work like that. I mean, we have to bear in mind that there are some 2 million people who are employed in the financial sector all across the UK, depending up to a point on what happens in London, but actually working all across in call centres and also in related jobs. The types of services which the financial sector absolutely needs. So it is a very fundamental part of the economy. And if you add it all together, we're talking about a size of a sector which is considerably greater than, say, manufacturing, which, despite the fact that the pound has been falling, its output has also been declining instead of increasing. So we're talking about it being a very significant element of what makes the UK work. And it is the only part, well, it is not the only part of services, but certainly it is part of the service sector which is able to have a current account surplus with the rest of the world, whereas on everything else we have a deficit.
You're talking about 7% of GDP.
Well, it's actually higher than that.
But not everybody is going to leave. It's only going to be some of them, isn't it? I mean, aren't we going to manage without?
Yeah, I mean, Vicky's alluding to the whole of the financial services sector. If we zoom down to London, I actually think then, obviously, you're talking hundreds of thousands, you're not talking millions. And I think then we really actually see one of the core strengths of the city, and that is what we economists call agglomeration economies, all those networks, support networks, all those supporting companies. If you look at the breadth and depth of the city there, and then you compare it with Frankfurt, then you compare it with Paris, and it's a joke. I mean, they are so far behind. So, yes, there will be a few thousand jobs potentially from some organisations which want to move. But actually, we can turn this into a plus. If we make the right decisions now, if we can liberalise the financial sector more. Now, there's a huge problem with fat cats and post-financial crisis and the politics of that. But if we can have a competitive regulatory environment, actually, that is pro-growth for the city, then actually a few thousand jobs here or there is going to be nothing. You know, the city has flourished over the years. The city has grown over the decades and the centuries on freedom. And there's nowhere in the world where you haven't given a successful, high value-added sector freedom, which it hasn't thrived and prospered. And we can do that now. We just got to have the confidence to do it, I think.
We'll get on to regulations if we can in just a moment. But Kelvin, your point, you're pro-Brexit. You think we're going to be pretty good after this. Does this make any difference to you?
Well, no, I mean, I think the point has been made. There might be some marginal shifting of jobs from the City of London, but we were told before the referendum, Project Fear, that there would be a disaster immediately afterwards. What first thing that happened was the stock market surged, and it surged this week again. So I don't think there's really a serious problem with the financial sector. What's actually starting to happen, of course, is that the manufacturing sector, the real economy, is starting to grow again. And even the Telegraph, not a left-wing newspaper, an arm of the left, has suggested that very soon there's going to be a bounce in the economy driven by investment.
Oh, all right, but that is a different story.
I'm not sure I trust the FT's forecast.
Let's look at London's position, number one at the moment, ahead of New York, Singapore, Hong Kong. Paris comes 29th. Nobody's going to want to leave London. It's just too good.
Well, in a number of cases, they're going to have to, because if we're not members of the EU any longer, and therefore we don't have the passporting arrangements, in other words, the ability to just sell services across once you establish yourself in the UK, then they have to establish themselves somewhere else too, unless we have some other agreement, which is sort of equivalence agreement. And if it is equivalence, it means, in other words, that they accept our regulations. There is absolutely no way, and therefore we can trade across. There's absolutely no way we can reduce our regulatory framework here at all. In fact, if anything, we're going to have to keep it higher.
Why on earth can we not?
That's a case for more freedom, not less.
Why can we not set up a system of regulation that mirrors the one in Europe but isn't the same as?
Well, it has to mirror it, but it has to mirror it also in whether it is regulation that they will accept is strong enough to allow anyone who's operating there to do indeed what they were doing before and more. So it means, therefore, that you have to be pretty strict with your regulation. And it has been made very clear by the Treasury, the FSA, or rather the FCA and others, that there is no chance we're talking about reducing the regulatory burden in the financial sector.
Well, ultimately, that's not a decision for regulators. Ultimately, that's a decision for the politicians to make. And there's a huge political battle here. And the problem here is the government is not articulating a vision of how the city could thrive after Brexit. All it is trying to hold the line against those who say, it'll barely survive. And instead of actually putting the pro-growth, pro-liberalisation argument, the really confident vision of the future, it's not doing anything. I mean, this is not a criticism of the Secretary of State. I think they're doing a good job, given that this is the job for the Prime Minister to articulate, and I'm afraid that the Prime Minister is hunkered down in Downing Street and not doing the job.
So there are in just a moment, Kelvin, if I may, but I just wanted to get Ian's reaction to that, because we'll talk about politicians and the duty they have in a second.
So there are some valid points that are being made here. Let's take just a couple of them. The first one is we're not talking about an existential problem for the city. We are, in the case of manufacturing and agriculture when it comes to Brexit. That is a properly existential situation that is being faced. In the city, it won't have a heart attack. If anything goes wrong here, it's going to bleed out. And it'll be a long, slow process. You're right to say, for instance, that places like Frankfurt and Paris don't have the capacity, not just in terms of jobs, but even in terms of really sort of school places and housing to shift people over in that way. It's true.
Actually.
However, what starts to take place, and this is how the process would go, is that we will see firms set up a branch somewhere in Europe. They'll need to register themselves with the European regulator. That means they come under the European regulations on risk management and capitalisation. And over the course of the next few years, they will find that there will be more and more European regulations that they are asked to abide by. And that they will start asking themselves the question, well, if we've got this branch in Europe where we have to abide by all of these political decisions over here, and we have this other branch in London over here, which is for a much, much smaller market compared to what we're dealing with in the entirety of the single market, why on earth are we keeping both these? And we will see a slow transfer away. So in terms of the sequencing of Brexit problems, this is actually not a very immediate one. However, in the long run, what it does is present a significant threat to one of the main economic lifelines that this country enjoys.
Vicky's dying to get back in, but I did say it was
right.
Kelvin. It's up to you guys, the politicians, to make sure that this works.
Well, but, I mean, I think we are going to be okay. The problems, I think, for the future are inside the Eurozone. We've even seen in the last couple of weeks, panic in Italy and Spain, shifting capital to Germany because they're worried about, quite rightly so, about the future of their economies. The rigidities of the Eurozone are massively deflationary, and that is going to be the real problem for Europe.
We are fancy weather, because at the moment the Eurozone is far outperforming Britain. I mean, you were saying a moment ago that our economy is absolutely fine. At the moment, our economy is actually struggling. You were quite right to say there was a surge immediately after the referendum. But since then, we've seen a decline in investor confidence. We've seen, obviously, a decline in sterling, which exports haven't really made up for. It's a very strange world.
Please let Vicky come in.
Well, in terms of Europe, there's no doubt there is still a banking crisis, a banking problem. But look at some of our banks as well. Look at the Royal Bank of Scotland, for example, still. So in state hands. So we can't be complacent in saying that the only problems are over there. But there's no doubt they need to work them out. But they are growing at the fastest rate in 6 years. And the reason why the economy here did reasonably well after the referendum is for financial reasons, for the financial sector is the one that actually helped that, because the Bank of England unleashed a huge amount of liquidity into the economy. The banks lend like there was no tomorrow. It's one of the problems we now have because consumer spending has gone up so significantly, or had gone up, and consumer borrowing in particular, sustaining the economy. Now we're trying to rein that in. So it is the financial sector that allowed it to happen through the action of the Bank of England.
And therefore, why would it not continue to help?
Well, we can, and this is one of the reasons why it doesn't make a huge amount of sense to leave, because up to a point we've been doing exactly what we want. And if you look at regulations in Europe, and of course having also the ability to sell across, we are the ones who've been pushing for tougher regulations. We are the ones who set the pace. It is the Treasury that has been very instrumental in a number of things that have taken place. We have resisted the financial transaction tax, it's true, which perhaps will come on. When it does, I wonder what we're going to do. And the costs of operating in 2 areas, just as has been said before, means 2 regulatory authorities, loads of capital that needs to be raised.
Okay, I'm going to stop. This particular, well, you can throw it in. I'm sure you will, even without me saying you can. But I want to know is, look, we know it's going to happen. It's how it happens. It's whether it's a hard Brexit, that's it, the end of everything, or it's a soft Brexit with a transition period, which looks more and more likely. Now, that's better for you guys, isn't it? And what about you chaps here?
Well, I think we have to get back to the core vision here and you set out a scenario where we kind of slowly lose our share and we just slide slowly towards a kind of a death in the city, but it's over decades, it's not over years. But that presupposes we just sit here and do nothing. And the core argument of leavers like myself, and maybe not the same actually as Kelvin, because he's coming from a Labour perspective, is that actually if you liberalise financial markets, that not to give them free rein to go crazy.
What does it mean, liberalising?
That means to have a competitive regulatory sector.
But we can't do that in a world where, in fact, if anything, the risks are increasing, and therefore, in order to be able to deal anywhere, you have to satisfy all the authorities that you're dealing with, that you're complying with various...
New York.
Compliance has gone up and up and up.
Yeah, that's not to say there isn't compliance, there isn't regulation. It's just to say that, look at the burden on the city now. Look at the things that you could do which could make the city a more attractive place to locate. And in the wake of doing that, yes, you may lose some things because of passporting, but there's all sorts that you could do to liberate the city as well.
The whole world is going in the exact opposite direction. If you look at the way that the Americans and the Europeans have been in negotiations recently over the use of clearinghouses and derivatives trading, all of that is towards getting equivalent standards so that you can trade between massive economic blocks. Now, we need to be able to trade with Europe. It's by far our largest market. In order to do that, as Vicky is saying, you abide by equivalency. Now, that you can have that inside the EU, you can have it outside, but ultimately you're saying, we will stick to these standards in the same way that in a smaller area the Americans are doing. Now, if we want to cut ourselves off, yes, you can liberalise. By the way, there's no political support for that at all. And
I know there's a political challenge.
Kelvin's being the politest at the table. He's not talking over people, but I want to give you a chance to say.
One thing that really concerns me is we're conflating issues. Britain and the EU is one issue, but that's small by comparison with the global debt problem, which many people now think is going to be a serious, bring another crisis like 2008. Crispin Odey, we all know, billionaire, hedge fund manager, whatever, is predicting that we're going to have another crisis much worse than 2008. And there are many people around the world suggesting that the global debt problem is where we're really at. And we mustn't blame the EU or blame our leaving the EU for that problem. That is something we're all going to have to face. I see a world...
A period of uncertainty allied to that would make things perhaps worse.
I'm sorry, you did encourage us before to interrupt, but though, I know it's a little bit rude, but that doesn't suggest that we can in any way relax our oversight and our regulations in the financial sector if indeed this next crisis is about to come. It suggests the opposite. So I really can't see how we can relax.
There's a difference here, but sorry Vicky, we need to clarify here. I'm not saying no regulation. I'm not saying we don't have oversight. I'm saying we have effective oversight, a prudential regulation. But the regulatory model we have is far from just what is needed for sensible purposes. It's overly intrusive, and as a result, it deters location. And let's go back to first principles here. If we think about the City of London, we would say that New York is powerful enough to negotiate independently, but London is bigger than New York. In some way, suddenly we seem to say that London is not powerful enough to negotiate on its own. It is. The UK is powerful enough to...
Of course, it is powerful enough to negotiate on its own. It just needs to make a decision as to whether it wants to be able to trade very easily with other countries or whether it wants to make that process harder for itself.
Well, we have no choice. We are leaving the European Union, but...
We may do. Oh, no, we may do. It's not a good...
Let's go back to the way I introduced you. What the hell happens next? The title of your book. So, what the hell happens next?
That's an extremely large question, which it took me about 200 pages to answer. I mean, what are the core things? And I mean, you're talking about the debt crisis stuff, which I think is genuinely troubling, is looking at our reliance on consumer spending in this country when the prices of goods are going up and wages are not rising at that same level, and that is happening because of the fall in the value of sterling as a result of the referendum. So when you look at these core dynamics in our economy, the really troubling stuff comes not just from Brexit, but from the way that Brexit interacts with our pre-existing economic problems. And that causes me some alarm.
The depreciation of sterling is absolutely beneficial. Mervyn King says so.
It's helped our exports.
Joseph Stiglitz says so. It is absolutely...
And this is one of our biggest exports.
It is worth saying the manufacturing output has been declining, not rising, despite the fact that our exports are benefiting from a low pound. And the only reason why share prices are up is because, of course, 80% of all the earnings of the FTSE 100 firms come from abroad, so it's automatically improving. But it is causing loads and loads of
But reported today, Nissan is going to increase its production in Britain massively. It's going to double its supply chain manufacturing in Britain. Rolls-Royce is doing extremely well and is increasing production, increasing investment. Our manufacturers, there is a J-curve effect immediately after a depreciation, of course, but over time,
taken quite some time.
Over time, it will boost. We have a massive balance of trade deficit with the EU because our pound has been overvalued relative, especially to the Deutschmark. I think it would help everybody, and particularly Greece, I think, if the euro was dissolved, then every country adjusted its new currency to an appropriate parity.
Okay, we're getting away from Brexit and the city. We're looking at the bigger picture, and we've done many programmes on that, and we will do many more. But Graham, you want to say?
No, just one thing. I mean, there's an awful lot going on here in terms of growth and prices and wages. You know, growth in Europe, yes, is better now than it has been. But that's QE and the lagged effects of that now feeding through into the European economy. If you look actually last June, in the wake of Brexit, the Brexit vote, and everybody's saying, Project Fear was all undone. Actually, I'm not a supporter of Project Fear, but I would say that the core reason the UK economy continued strongly in the second half of last year was nothing to do with Brexit in or out. It was pure and simply, if you look at the numbers, then the quantity of money in the UK economy suddenly picked up in June of last year for reasons we still don't quite understand. It was actually
the bank printed a lot of money.
Well, then it wasn't liquidity. No, if you actually look at the QE extension there, that wasn't the underlying source of it. The underlying source was city-based, but what it actually showed is that for the first time since quantitative easing was introduced in the UK, the Bank of England met its target growth in the money supply because it reached 6 or 7%. And that has tapered off, and that's why we're now seeing a bit of more of a softening in the UK economy. But I don't think you can actually attribute it to Brexit or
hugely was the reaction of the Bank of England.
Are we going to see the government handing out, if you like, sweeties to these companies? We're going to reduce corporation tax because we want you to stay.
Of course. And look at what's being mentioned about Nissan. I mean, the reason that Nissan keep on doing these here is because they keep on stitching up secret deals with the government, which nobody will tell us what the content is. It's like some kind of tin pot third world country that suddenly does quick deals over here, kept completely secret, and out they come with a statement saying, oh, we're going to stick around. That is not a vote of confidence in the British economy. That is a quite dangerous development in the way that we conduct ourselves, but one that has been made necessary by the uncertainty created around Brexit.
There are lots of incentives, we're going to say.
There will be. I'm sure there'll be incentives. The question is whether they'll be able to meet those promises, whatever it is that they have made, given what's going on right now and the negotiating stance that the Europeans are taking, which I think is absolutely right for them from their side. And of course, one of the problems has been this increase in inflation. The cost of the supply chain has been very significant because of the fall in the pound. It is suboptimal for firms to try and substitute what they were getting from a very efficient market. It was the best free trade area in the world that we could possibly be involved in, and one that actually also includes services. No free trade agreements cover services to the extent that this free trade agreement covered it. And we're not going to make up for it.
We're running out of time, and then I'll give Kelvin the last word.
Let's not delude ourselves. The EU had free trade within the EU, but it is a huge protectionist walls to the rest of the world. It is a profoundly protectionist regime. If we get out the customs union and we go to unilateral free trade, UK consumers and intermediate producers will have lower prices. They'll be better off. It's just as it happened in the 19th century when you abolished the Corn Laws, consumers had more spending
power. It's a theory that was last popular 200 years ago, and for very good reason.
Well,
and you will bankrupt your domestic producers.
Completely. No agriculture, no manufacturing in this country.
No,
you've just signed a death warrant on agriculture and agriculture.
It encouraged manufacturing in the 19th
century.
Kelvin,
let's go back to the very beginning of this programme, in which I said, would your constituents really mind at all?
Well, no, I think my constituents want jobs. Some of them work in the city, of course, and they do commute with me on the train every day. But many of them don't. They work in other sectors, particularly manufacturing. And we've seen, at relatively terms, living standards in Luton fall because of the disappearance of manufacturing, because of the way the economy has been managed, led by the financial sector. My one concern at the end is the reputational damage done to the city by things like RBS, the report on RBS last week, which was incredible. It's largely in the public sector, and it's been allowed to get away with absolute murder. And even one of my constituents had the same problem, where the bank forced a foreclosure on a loan it had made and drove him out of business. Eventually, with my intervention, they backed off from that. But that's what they were doing, forcing small businesses out of because they behave badly. Now, I believe in regulation. I think banks should look after businesses. They should lend. They should help the real economy. And if they don't do that, I think we ought to take serious steps to regulate them and possibly take some of them back and keep them in public ownership, make sure government has a say.
I wish I had time to go into what would have been my next question, which is perhaps we would be happier if the banks weren't here, because if we're going to have another financial crash, then the British taxpayers may end up bailing out companies that are here, big financial institutions. And if they were overseas, we wouldn't necessarily have to face that. But thank you. Thanks very much indeed. We could go on for a long time. We tried to avoid whether we were actually going to stay in the European Union or whether we were actually going to leave. I think at the moment the signs are that we will, to some extent or another. Thank you all very much for joining us here on Roundtable. From me, David Foster, and the rest of the team, we thank you for watching. We hope to see you next time. Bye-bye for now.